Ladies and gentlemen, I'm a shareholder of PayPal, and I'm happy with the little run they've gone on lately. Now, just because I hold PayPal doesn't necessarily mean it's right for you or anybody else, but in spite of this run, I think they do still have some work yet to do. The name of the game for PayPal needs to be efficiency. I do think people are starting to realize and come around on the idea that this isn't a dead company. Now, I want to go over what I think they need to work on in order to basically deliver the value that I think that they have the potential to deliver. I do think that we're seeing people start to believe, and that's a good thing. First and foremost, PayPal needs to continue to deliver some kind of top line revenue growth because the best argument against the narrative that this is a dead company is that they continue to bring in more top line revenue, more sales, and grow in this way. However, just because revenue is growing doesn't mean that they're actually returning more value. Think about it. If they're spending just as much money as it takes in order to grow that extra revenue, is that growth even real?
It's a fake. I told you, I created it, and it's real. Don't you understand? It is real.
So that may be true. It may be real. But if these costs are growing on a similar trajectory, it may indicate that they're really not growing that revenue very efficiently. And I think this is reflected in the margins. And if you take a look, you can see plain as day that over the years, gross margins have been sort of nibbled away over time. And this is why I think it's important to listen to what management, especially the new CEO, has been saying about needing to drive synergies and efficiencies and cut costs down. One area that I think gets rightly called out is the fact that, hey, PayPal has made multiple $2 to $3 billion acquisitions. And I think there's a good argument that these acquisitions have done a good job of adding revenue to the business, but are they doing it as efficiently as possible? When they spend on SG&A, are they selling a bundle of products, an ecosystem, or is each division basically doing its own spending in that area in order to drive itself as a standalone product? I suspect it's probably more of the latter based on what the new CEO has said on earnings conference calls. And I think that going in the direction of really viewing the PayPal umbrella as a family of products rather than a random hodgepodge of almost completely siloed and unrelated products should be somewhat helpful in some ways and perhaps drive a little bit of that efficiency that we're looking for. I also generally believe that if you're convinced that they can drive the efficiency going forward that they plan to, that the current level of buybacks are going to end up massively benefiting shareholders in the future. These buybacks, while the stock is relatively cheap, and while they're sort of figuring out some of the pieces of the puzzle, I think in the future we'll look back on them and say, this was brilliant. Great use of capital. Because if you think about it, a lot of the things that they need to figure out in the business and how to improve it require them to figure out how to, in some areas, spend less rather than spending more. Now, it could be that maybe they need to move some stuff around and cut one area and maybe increase R&D in some others in order to actually figure that stuff out. But ultimately, the goal is for them to spend less over time. Also, while PayPal did not necessarily shock the world with the innovations that they came up with, I do think that they offer a pretty compelling experience for customers and a pretty compelling array of products that are actually really awesome for consumers. I actually use a lot of PayPal services in my daily life. And I don't yet have a PayPal MasterCard, but I will say the 3% cash back on PayPal purchases, well, that says, hey, you shop on our platform and we'll give you an extra 3% cash back. I also can't stress enough how much I enjoy using Venmo as a convenient option when I need to, say, split expenses with friends, colleagues, family, anything like that, whether it be for lunch or for, gas, car rides, whatever. Also, it's a convenient checkout option for a lot of different things like Uber, uh, food service, delivery stuff like DoorDash, Postmates, that kind of thing, Uber Eats. So there's a lot of ways to use Venmo. And for the cost splitting and peer to peer stuff, almost everyone that I personally know uses Venmo over the other options like Cash App or Apple Pay. So, and this could be just an insular thing for me. It's just anecdotal, but that is just what I see in my day to day life. Now, the reason that it seems like it's probably starting to build some momentum behind it is I think that people are generally starting to believe the story here. Wall Street, although by a hair, does seem to have a consensus of buy amongst analysts. Most of the price targets seem to be above even today's slightly higher price. And I think, honestly, a lot of people look at it and say, there's a pretty good amount of upside here and not a lot of downside, at least in the near term. Now, there are a lot of bulls that do nothing but pump PayPal on their channels.
The greatest feeling you can get in a gym, or the most satisfying feeling you can get in the gym, is the pump.
Now, I'd like to think of myself as a little bit more thoughtful than that I don't just mindlessly pump PayPal and, stroke them to the moon. But I do think, even right now, it's probably still reasonably good value. And I do think that they have the recipe, the ingredients they need for the recipe to do what they need to do to provide a compelling return to shareholders. In my mind, they offer a compelling value to their customers, both individuals and businesses. And I think that with the right type of innovation and leadership, that they really can be a leader in this payment space for many years to come. I think a lot of the negativity around this stock is simply because there are a lot of people who either took big losses or who are bag holding that bought this thing when it was unjustifiably overvalued. We need to face facts as investors. PayPal was never worth $300 a share. If you bought it there, the mistake is yours for mispricing the opportunity. It happens to people. You just have to learn from it and move on. But that doesn't mean, because it was a bad buy at 300, that it's still bad today in the 60s or back in October when it was in the 50s. In my view, the key to succeeding with a stock like PayPal, or really any stock, is appropriately valuing the opportunity and paying a price that's reasonable and where the growth can match the price you paid in an achievable and realistic way. Remember that a business can grow, but if the price that you're paying grows faster than the business itself, I think that that's only sustainable for so long. And I think some people who bought PayPal at the wrong time learned this the hard way. I think at some point or another, almost everyone will misprice a stock in their investing career if they pick individual stocks. And that doesn't make you stupid or bad, but you should be able to acknowledge that you made a mistake and learn from it. Make sure you subscribe to the channel if you agree, like it for the algorithm, hit the notification bell. Also, join me on Discord, link in the description, and join a community of people that like to discuss investing and valuations on a daily basis. Take it easy, everyone.